Yep, let's go to the first slide. So our agenda today, we're going to talk about the Ontario auto insurance reform. So that's the new auto insurance legislation that took place effective June 1st this year. It was government mandated. It was not decided by the insurance companies. Okay, so part of the mandatory auto reform was a new snow tire discount. Many providers, including cooperators, did provide a discount prior to the implementation of this rule. In fact, cooperators has offered a 5% snow tire discount since July 2015, but it is now part of reform, and it is a year-round discount.
Would you say that again, please? If they had the snowflake, what?
If they've got the snowflake on the tires, so it's an indicator of a snowflake, or the term ice in any fashion, they would be considered winter tires or eligible for the discount.
I have a set of all weather tires, opposed to all season tires. Is there any discount associated with all weather tires?
They have to specifically be called winter tires. Now, it is a discretionary discount, so it doesn't have any bearing on a claim. So if you don't have a set on when there's a claim, there is no bearing, not at least with cooperators. It's a discretionary discount for the agent, and I know I have provided it to some clients that have all weather at my discretion, but I'm not going to, if you've got a Mustang that you're driving in the winter time and it doesn't have full winter tires, I won't be able to provide the discount. Simply because technically all weather tires are only good until -7. Winter tires are designed for below -7. There has been a change to the standard and optional accident benefits that are included in your auto insurance policy, and there has been a deductible change. Not necessarily the deductibles that are available, but the government has mandated that everyone will have a minimum deductible of $500 on collision and comprehensive. Formerly it was $500 and $300. You do still have the option with cooperators and many other companies to purchase the lower deductible, but your renewals will come out with a $500 deductible on collision and comprehensive. What it is the current policy, as well as what you can choose to upgrade your policies to. So on the left column is what, prior to these changes, your current policy will have. So I'll go through that very quickly. Income replacement would be 70% of your gross income up to $400 a week. Most of you will have this because most of you will not have opted to increase benefits. I noticed that within my brokerage. Despite asking clients if they'd like to increase benefits or that sort of thing, many opt not to because it's cheaper to purchase those benefits privately through a critical illness policy or a life policy or a disability, or you have it through work rather than pay for it on the auto insurance. So majority of people do not have the increased benefits. Housekeeping home maintenance expenses, they are only available for catastrophic injuries and up to $100 per week on your existing auto insurance.
Income replacement benefits.
Yes.
If you're 65 and retired, like pension, is that totally useless to you?
It's not totally useless. It's still going to be based on 65% of your income. So you can't be over indemnified. So if your income doesn't change, then you will not get the benefit. So it could be potentially useless. But in the event that you have any sort of part-time job or anything like that that you're collecting income on while you're in retirement, in addition to your pension, then it would come into effect. If you're not working, it's going to be useless.
So, is there a time limit on that? If someone's involved in a very bad accident, only pay out for 5 years, or does it pay out for the insurance?
So it's going to pay out until the claim is settled or until you're 65. So it'll go right until then. But after a year or 2 years, they typically will make a settlement offer and they'll buy you. So the government's been telling you guys for years that we're going to decrease the auto insurance. We're going to decrease auto insurance. Most companies have decreased them accordingly, and what people don't understand is you don't independently get the discount that the government is promising, but it's as a whole. So somebody might see an increase of 5%, whereas the other person sees a decrease of 20%. They still keep the rates the same in the areas that are the highest of risk. So when it comes to these benefits, they've been implemented legislation, and that's why the limits are there. We have to charge a premium accordingly because the premium is there. It would just be too much resources to start trying to research who does and who doesn't get these and what kind of discount to give on. Dependent care is not provided under the current benefits. Indexation benefit is not provided. What that means is just benefits don't inflate with the Bank of Canada's inflation rate. Third-party liability. What this means is non-insured automobile. So if somebody's driving on the road, they don't have insurance, and they hit you, the government actually provides $200,000 in liability to protect you. That's what is on the current benefits. And the tort deductible is $36,905.40 for court-awarded compensation for pain and suffering. You can reduce that deductible, and in the right-hand column, you'll see what you can choose from. Again, more or less irrelevant because this is what it was prior to June 1st. Coming into the new benefits will be the next slide.
We're actually paying for that, we're not getting a discount, are we?
Right. So what they're doing is trying to uphold their promise to resolve the fact that many people complain, oh, you know, you've mandated auto insurance decreases, but I didn't get one. My neighbor got 20%. I actually got an increase of 5%. And the company's still in compliance with what the government has asked because, as an average, they've decreased premiums by 15% across the board. Now, with this new change, they're forcing everyone to get equal savings. But what they've in fact done is simply given the consumer a choice. They've now given me the opportunity to accept and take lower benefits for less money, or continue to pay what you were paying before for the same benefits. So you will still have the options to re-increase your insurance exactly where it was before, but now it will come with a quote-unquote premium as opposed to the savings. So that's essentially what it says.
There's no discount.
There's no discount. So what has changed? Non-catastrophic medical and rehab was formerly $50,000. And attendant care was $36,000. Now, as a combined limit, you will be entitled to $65,000. So essentially, 86 versus 65. Catastrophic will be $1 million and $1 million currently, versus now it will be $1 million and $1 million. You will have the option to purchase up to $2 million.
Can you combine that catastrophic with your car and your home insurance as well and bring up to $2 million?
So this is accident benefits coverage. So liability is $2 million. That's third-party liability. So that's your liability to the injury of others. This will be what covers you specifically. So you cannot combine that third-party liability with primary liability for accident benefits.
Like for home insurance, we have $1 million as home insurance?
No. Again, general liability and the provision of general liability on most insurance policies is not to protect you specifically against yourself. It's to protect you against someone else, or to protect someone else from you. So your home insurance liability, if you had guests at your home and someone hurt themselves at the home or got in their car and drove drunk, you could be held liable for that, and that's what your liability is for. But if you slipped down the stairs in your home, you couldn't go after your home insurance liability to pay your medical bills. Current time limit. So for the current benefits, as well as going forward, there's time limits in which you have to access the amount of coverage that you have. So the accruing of medical bills and those sort of things, they often take time. Sometimes it's a lifetime, sometimes it's immediate and partial to each other. These would be the limits that you're subject to build up those bills and continue to have them covered. Current time limit for medical and rehab would be 10 years. It's going down to 5 years. Attendant term is currently 2 years, but is going up to 5 years. And if the insured person is 15 or younger, the benefits would remain available until age 25. That is changing from to the 18 or younger benefits will remain in force until age 28.
So if you're in an accident, you become a paraplegic with 5 years and then you're on your own.
If what happens under these benefits, these are standard accident benefits. If you're actually paraplegic, as an example, then you would have grounds for what's called a tort lawsuit. So you could actually go after third-party liability. So you'd have to either sue the other person, their insurance company. Once your benefits max out and you are actually catastrophically injured, you have access to the tort lawsuit, which would be suing their insurance company to pay and up to their legal liability limit. Now, if they were not the ones at fault, if you were, you would actually go after your own insurance liability at that point because of the no-fault rule.
Okay. Now, this is sort of along the same line. You're in an accident, you have a nice Mustang, brand new, off the lot, blah, blah, blah. You get in an accident, not your fault. Now your car is say it was worth $30,000, now it's worth $20,000. They fix your car, you have a diminished value of $10,000. Your insurance company will not pay that out.
No, that's happened to me personally, so
Who do you
speak
sue?
from experience. You can go to small claims court and sue the person who's at fault for the accident, so you can come after them, but I have yet to hear about a court that awards those funds. In the country of Canada, there is only what's called gap insurance, so, and that's what that requires. It's called gap insurance for the diminished value as a result of an accident. It's available through your dealership to a maximum of about $5,000. If you purchase it at time, you purchase the vehicle. Okay? And again, $5,000 doesn't get you very far, and you have to purchase the vehicle again from them in order to apply that credit. Okay? In the U.S., you can actually purchase gap insurance specifically for that cause, but it's not available throughout the country. Minor accidents. So this has also changed. This is something that a lot of people will have experienced, for one, but will also find as a benefit. Previously, if you're in a minor accident, even if you paid for the claim and the other person reported it, often what people would do is, they make a deal with you, say, because it was your fault, you pay them the $2,000 and then they go to the insurance company and make the claim anyways, and then screw both parties. It would go on your insurance record, even though you paid it out, and tell the insurance company you paid it out, then they may go report it and they may never pay anything. But it would still go on your auto insurance record and you get that 25% surcharge for having an at-fault accident. Now, under the new minor accident guidelines, if you choose to pay for your accident, if it is under $2,000 in damage to either vehicle or both vehicles, it will not go onto your auto insurance record as an at-fault claim, so your insurance will not increase. Cooperators themselves actually have gone above that and applied a $10,000 limit. If you choose to pay your claim under $10,000 and the company doesn't pay, then we will not charge your auto benefits.
What is the point of having insurance if we have to go through that?
What is the point?
I don't see the benefit in paying insurance premiums if I have to dish out money out of my own pocket and get penalized 25% surcharge for an accident. That's what insurance is for, is to protect you from that.
Yeah.
So we're just going away from that.
So what we're doing again is going back to providing the consumer the choice, which is something they didn't have before.
Are threatening everybody, putting a gun to their head, stopping them from making a claim because their rates are going to go through the roof.
Again, I pay insurance just like you do.
I know.
I'm in the same boat from that perspective.
This is Joe Public speaking, and we're all affected here. But that's exactly what the insurance companies are doing, putting a gun to people's heads and saying this or else.
You know what, I mean, on a flip page, I can agree from an accident perspective, and maybe I can forgive that. But what really bothers me is when you get speeding ticket for $20, $30, you talk them down, you have no points, but they still charge you the 5% for the first one, 15 for the second, 30 for the third. You get more than 3, we're not even going to insure you. So that's not going to change. There's been a lot of rallies, a lot of people getting together about that. Again, it goes back to statistics. What is the likelihood of so-and-so to get into an accident? And it goes back to the accident. What this is at least doing is providing the consumer a choice. So as opposed to having the gun to your head, now to take the insurance increase, which often, if it's a $2,000 accident, your insurance increase for the next 6 years, because it does stay on your accident record for 6 years, will be significantly more than $2,000 over that period. And if you have another slip up when you have 2 accidents, now many insurers won't insure you on their primary book. Right?
Exactly
So what this is doing is putting it back onto the client and saying, okay, so your increase is going to be cost you $3,000 or $4,000 over the next 6 years, but if you pay the 2, then you're not going to have that issue. So yes, I'm not going to dispute the fact that insurance companies are a business and they're out to make a profit, and they always will be that way. And now the government is essentially assisting with that, right? I mean, the only benefit is it would cost you half as much to pay yourself at $2,000 than you would at $4,000.
But as long as you keep paying, the insurance company is willing to take your money. The minute you have an accident, bang, they jack up your rates.
That's what I think.
How's that fair?
What I think sets one insurance company apart from the other nowadays is in fact just that, is your experience in the event of a claim. There are many people that have that issue. There's many people that have a much higher surcharge when they have an accident with one company versus another. And as a consumer, we shop around, and unfortunately, we shop for price. Auto insurance and home insurance is a commodity. So again, like a lot of other things, you get what you pay for. The cheapest provider might not necessarily be the one that's going to be there to help you during a claim. So you have to take that into consideration. Talk to friends, talk to family, who's had claims, who's been treated right during claims, and that's who you want to be insured with. I mean, I don't know how to better answer the question. I agree with you. Because I get both. I have an accident on my right side, I pay 25% more.
It just goes against everything that insurance companies are supposed to protect you.
They're there.
That's why we have insurance.
What they brainwash us to believe, or what they brainwash us to know, is that they're there for large claims. Those claims that would seriously change your life, those are the claims that insurance companies want you to make. They don't want you to make the insurance claim for a $2,000 bumper on your new Mustang. They want you to make the $1 million claim because you can never work again, and that's where you need money. And that's when you truly see a difference with an insurance.
They still jack up your rates.
It's the exact same surcharge. And that's why they're trying to defer people from doing small claims versus large claims. Yeah, and if it's not your fault, then the rates will go up. So these claims you're speaking of, that's right. These claims you're speaking of are entirely when they're your fault. So why should the insurance company take, okay, that's a bad question. But essentially the insurance company will take full onus for your liability in the event that you've had an accident at fault. Now they're saying if you choose to share in that fault, you're not going to have your insurance affected by it. So at least you have that choice. If it's not your fault, your rates do not go up.
I just think that we're paying more and getting less. Basically.
Minimum comprehensive deductible, we discussed this, $500, collision $500 comprehensive. You can elect to choose a $300 deductible, but your renewal will come with a $500 deductible. Service fees reduced from 3% to 1.3%. If you choose to pay monthly, insurance companies will charge you an average of 3%. The government has legislated that they cannot now charge you more than 1.3%. Cooperators has removed all service fees entirely. Again, it's at the, so if you went and dealt with one agent versus another, we're franchise owners, their opinion of that would differentiate. What the wording is supposed to stipulate is simply anything mechanical, any mechanical modifications, an intake, anything like that. At least notify us of it, because then we can tell you, or at least make sure underwriting says yes, okay, it's no problem. Anything like lowering springs or rims, that sort of thing, is not going to void the policy, but it is something you want to make sure we're aware of, because it does increase the value of the vehicle, so we want to make sure we compensate you for that. Any sound system exceeding $1,500, as an example, if we don't know that, we won't reimburse you for it.
Any amount of increase in horsepower or anything like that?
No, not. I mean, if you simply did a tune to the vehicle and you died on it, then there would be no additional modifications. It was simply electronic. If you choose to, so like let's say for an example, the stereo system, we have a limit of $1,500. If you choose to increase that limit because you have a $5,000 stereo system, it goes under an endorsement for sound, and it would cost you a premium for that specific endorsement. So the same would apply for rims, tires, or anything that is above the standard of the vehicle. And the best way to say, what's considered modification, if it voids your warranty in entirety at the dealership, then it would be considered a modification that the insurance company would have grounds to deny if you haven't told them about it. I wouldn't, for an additional on tires, it wouldn't really affect the premium at all. The sound system, for example, is $23 for the year to go from $1,500 to $6,000. Okay, so it's not going to be anything that's drastic. So the largest portion of your auto insurance premiums is liability. It's nothing to do with the value of the vehicle. That's why you can go buy a $100,000 Mercedes or a 1990 Corolla, and the insurance will be cheaper on the $100,000 Mercedes because there's less of them on the road, there's less accidents, and the liability premium affiliated with that vehicle has less claims, so therefore the premiums are less. Somebody driving the Corolla is more likely to make a claim, therefore the liability is higher, and that's why it costs more. Thanks.
Thanks, Justin. Thank you.
Thank you very much.
Thanks very much.